We have interest rates. The Fed just cut again this week, or last week, sorry. And my friend Tim Wood, cyclesman.com, he's done some analysis, and he said these are the two most aggressive rate cuts since 1957. That's how far the data goes back. And what we mean by that is usually the 3-month T-bill anticipates Fed rate cuts. This is kind of a little known fact. The market kind of leads the Fed. And the spread had traditionally been like 120 to 150 basis points pre-2009. And the spread's been getting narrower, but the last two cuts were under 100 basis points. We had a 70 basis point spread in the September cut, and we had 50 basis point spread in the most recent cut. So the question you have to ask is why? It's the $1 trillion question. They're the most aggressive. They normally don't cut this fast. So you could say they were trying to help the Harris administration being political, or things behind the scenes, the plumbing in the system is bad. And what do we know is going on in Japan? Japan has a Hobbesian choice to make. They need to either defend their currency or be blamed for the yen carry trade unwinding, which started to unwind in August, but then they did some interventions. So we are seeing kind of the beginnings of the crack in the global financial system, where, basically the decision was made after 2009 to fix a debt problem with more debt. And, if you look at what gold has been doing, gold has been rallying in anticipation of this coming disaster. Gold, I think, unfortunately, if we do have a financial margin call where everything starts to go down in response to the real numbers, gold will get hit, but I don't think it will get hit as bad as it did in the 2008 crisis. Gold went down 50%. I think gold has a better chance of only going down 25% and then going to new all-time highs, after the correction. So gold, we like gold long term. But look, this correction that's coming in the equity markets, the real economy is already in the tank. And, if you want to know why Trump was really elected, there was some interesting stats I saw from an economist friend of mine that he keeps his stuff private, but he allowed me to talk about it. It was minus 2% real wage growth going into this election. The last time that happened in 1980, Ronald Reagan won in a landslide. In 1992, when Bill Clinton won the election, there were three candidates at the time, but Bill Clinton won, and it was the economy stupid, as James Carville said all the time back then. So I was on a couple shows being asked, who do you think's won or going to win? I said, Trump's already won, according to this economic indicator. And the question is, is it too big to rig, so to speak? And it turned out to be too big to rig. So the real economy, the average person on the street feels it. Business activity's down, home sales are down. Employment it'll become apparent soon enough that employment is a disaster and going to get worse. So Trump's going to inherit a turd. The question is, can his policies prevent, what I thought was going to be a total wipeout? I hope so.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly, Varden Silver has been busy expanding their high-grade silver deposit in the Triangle. And they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video. I want to dig into those a little bit because I feel like on the campaign trail, things were kept a little bit vague. So, can the Trump animal spirits intervene in such a way that would soften the blow, lessen the likelihood of a deep recession? What do you look towards, Ed?
Well, so he needs to cut regulations. Cutting regulations and red tape would help tremendously and create animal spirits. They're talking about cutting the government, which needs to be done, but that's been the only game in town for the economy. So any hacking of the government spending is going to affect the economy in the short term. Long term, it's a great thing, but the Band-Aid needs to be ripped off. But government spending has been the only thing really holding this up. And if you looked at the month of September, I think the payroll number was the largest number of government jobs ever created, 750,000 jobs doled out in the month of September. And just putting people on the payroll, giving them makeshift jobs. So, and of course, immigration is a dirty little secret as well. Immigration has helped the economy because you've been handing out goodies to these illegal immigrants. That helped increase the velocity of money. So you had the Fed come in and stop the bank run. You had the unprecedented government spending, hiring, and then you had the illegal immigrants getting basically large amounts of money that they immediately dump into the economy and spend, that increase the velocity of money. Trump is going to go after those things. So I suspect that's going to have an adverse effect on the economy in the short term. The question is, can Trump navigate the downturn, be transparent with the people? We're going to have to take some pain, and then we're going to unleash the animal spirits in the private sector. This doesn't happen overnight. And they handed this to Trump on purpose, I think. I really do.
What do you mean by that, Ed?
Because they've hidden. We're going to come to find out there's fraud in the government numbers, the GDP numbers, the BLS numbers, and the central bank cycle has a fraud element to it. It always ends in fraud. And if you look at the 90s bubble, the .com bubble, that was corporate fraud. And then we had a crash. We had some rules put in place. Then in the 07, 08, 09, there was massive bank fraud. And then the Fed stepped in and the government stepped in. And what did they do? Did they prosecute that fraud? No. There was not one banker that went to jail. And that fraud still resides on the balance sheet of the central banks. All those bad mortgages are still there. And so what ended up happening over the last 14 years was unprecedented government spending and quantitative easing, and basically kicking the can down the road. And I suspect, and I already have good evidence of this with the non-farm payroll being revised down 850,000 in August, the fraud just moved on to the government, the governments of the world and the central banks.